Hey traders, welcome back to my channel. Today we are going to be looking at zones and key levels. So like looking at the difference between them. Is there a difference? How to find both and stuff like that. It might be a little bit longer of a video, so just keep that in mind. But I'll try to keep it as short and sweet as possible. And yeah, we'll just get right into it. So yeah, guys, today we're going to look at zones and key levels. I thought I had a video on this filmed previously, but I don't. So I have a little bit of a write-up here, but not nothing too much. We're going to do most of it obviously on the charts. I just want to quickly point out what the difference is. Okay, so the difference between zones and key levels are that zones are really just areas of support or resistance. So they're happening all the time on the chart, right? Even, during a pullback or a smaller time frame trend, you'll still find areas of support or resistance kind of everywhere. Whereas key levels they're still areas of support or resistance. That's technically what we're looking at, but they're a little bit more significant, meaning that price will respect it more often and more accurately. So you'll see what I mean by that when we get into some examples. So how do we find a key level? Because obviously if price is going to respect a key level more often and more accurately, then that's what we want to be using as often as possible, right? Well, the thing is, in order to find a key level, you're really going to want to be on the higher time frame. So we're looking at, even the daily, weekly, monthly. It's going to be much easier to spot that way. We're going to look back throughout price history because we want to see how often that particular level was respected. And one last note is that the more recent, the more significant. So the more recent that level's been respected, the more significant it is to you because we know that price has just recently respected it. Okay, so just a few things to keep in mind there before we start looking at the chart. So I'm looking at the Euro USD. We've been looking at this one a lot lately just because it's giving us a lot of good examples. But the first thing I'm going to do is show you how I plot a normal zone. So there are two ways that I do this, okay? So one, I do this using what's called the engulfing method. And I will link my dedicated video to this down below. Just if you want more examples and things like that. And the other way is just by plotting S&R lines, so support and resistance lines, and then encompassing them in a zone, so in a rectangle basically. So the first way, I'm going to show you the first way. So what we're going to do is find an engulfing candle, okay, that's occurring at an area of support or resistance. So I have one here, but that's not the best example. So I think I'm going to use this guy here. Okay. So we can see here that we're at an area of resistance, right? We can see price has respected it here, here, and here where I'm circling with my mouse. And then we have this bearish engulfing right here. Okay. And so what we're going to do is box in the candlestick that the engulfing candle is kind of swallowing up. So we're going to get this bullish candlestick. Okay. We're going to box that in, double click on the rectangle just to extend it. So you could just drag it all the way, but that's just a little more annoying. This is an easier way, just extend it. So add a negative minus sign and add a bunch of zeros, and then just add a bunch of zeros down here. So you go to settings and coordinates to do that. And again, I'm just extending the rectangle, nothing fancy there. And that's one way to draw a zone. So now what I would do is go back throughout history and ensure that price has respected this level, which I can see that it has at multiple areas. Okay, as we go through, we can see that happening. I always say I need 3 touches to confirm that it's a zone that I'll use. And the more recent, the better. And that's it, really. So that's how you do the engulfing method. I'm not going to do a bunch of examples on that because, like I said, I'm going to link the dedicated video below. But that's the first way I do it. Very, very simple. It works the same way if you have a bullish engulfing. And don't be too particular about your engulfing candles either. Like, for instance, if it's a little sloppy and doesn't quite line up with like, every rule you've heard when it comes to engulfing candles, that's fine. Like I would still use it because you're really just using it to box in an area, right? And another thing I should note, like people ask me why that works. And the reason being, when we have, let's try to find another quick example. This is going to be a little bit of a longer video anyways. Let's see what I can find here. Okay, so we can use this example. I think this is the one I just used, but we're going to use this example. So when you have an engulfing candle, right, coming from an area of support or resistance, so like we have this resistance here that also has acted as support. When this engulfing candle forms, it's breaking out of that area, okay? Making it a significant level that because it's been broken and then also retested, right? So that's in essence why it works. It's not like a, magic way to find zones. You still have to confirm that the area is valid by going back and checking. Now and this is the really easy way to draw zones, and this is I find this method not as effective. I love the engulfing method. I just think it's an awesome way to do it. However, this is much easier. So if you struggle with finding engulfing candles, especially because certain pairs, don't always have them, you can do this method. So really, like, this is just super, super simple. Find your area of support or resistance, okay? And you guys know, if you've been following me at all for any length of time, when I draw a resistance line or a support line, I just try to include as many wicks as possible at the touches, okay? So as my line touches these areas, I want to just include as many wicks as possible. That's going to make your zone more accurate as well. And then simply what I'm going to do is draw a rectangle tool around as many of those wicks as I can, okay, without making it too big and boxy. So I'm going to stop right here. I could go down and try to cover these guys, but that's going to be a really big, ugly zone that I don't want to work with. So I'm just going to include as many as I can, okay? So the same thing as when I draw my support and resistance line. And again, you can extend this out by adding a bunch of zeros. No technical terms here. And go back and make sure price has respected that area. And this way, if you find, that it's not in the perfect place because of where you've roughly drawn it in, you can always move it a little bit. But this seems to be good so far. Let's just go back and see if I can find any more. And that's, this is really just the simplest method. And don't be afraid to move your lines either. Okay, so we can see that this is a nice placement there. So let's go back. And I think, did I move this by accident? I may have. No, I think we're good. Okay, so that is the next way. And I think, I'm just trying to think if I want to do another example. I'll do one more example of this. And remember, these are just standard zones, okay? These are not key levels. These are just standard zones. You could also just use support or resistance lines. If you like using lines, by all means, you can do that as well. And so like right here, we could do another one. And this time I'm not even going to use the line. Actually, I'm just going to take my rectangle tool and say, okay, oops. I have, this area of resistance here, box in as many of those wicks as you can, and then you can go back and extend it just to ensure that it's been respected. Okay, so again, super, super simple. And over time, you'll get so used to doing this, you won't need to draw the line in anymore. You'll just be able to quickly plot that in. And yeah, again, don't be afraid to move it around. If you go back and you see that other levels were more highly respected, don't be afraid to do that. That's as simple as it is. Like, I can't really make it more complicated. I know everyone wants like the magic trick, but that's how I do it. That's what's always worked for me personally. So now getting into key levels. So key levels, you guys, and by the way, I was on the daily time frame. So I'll often draw my zones on the 4-hour or the daily or both. And just so I don't get confused, I'll just make them different colors. So like I would say my 4-hour would be, I don't know, do it like blue and then keep my other one black, right? And then I know that which zone I'm looking at when I go back. And that's good practice to do just so you're not getting too confused. And now looking at key levels, I'd actually start on the weekly or even the monthly, okay? Even the monthly. So if I were looking at the Euro US dollar right now, what I would do to plot to find a key level, I'd start on the higher time frame. So I'd even go, like I said, to the monthly. And looking at our trend, so we have been bullish, you can see here the last couple of months. I'm going to look for an area coming up, okay? So something that we're either approaching or that we've just approached. And we can see right off the bat, we are approaching this level here, okay? And I'm just trying to incorporate these wicks, this wick, this wick, so as many as I can, just so you guys can see what I'm doing here. Now, we can box this in. You can use the engulfing method if you want to. So if you want to go and find, an engulfing candle, it is a little bit harder on the monthly time frame. I'll tell you that off the bat. Or we can just do this more simple method and box in as many of these wicks as we can, going to our coordinates and extending the rectangle. Now your monthly zone or key level is going to look huge on the lower time frames. That's normal. And then what we're going to do is go back and say, okay, has this level been respected? Even on the monthly time frame. Obviously, we can see it has multiple times, even on the monthly. Now you're not going to see as much price action on the monthly. So we'll go switch to the daily and we'll say again, okay. And like I told you that this is going to look really big on the lower time frames, but just looking at this area specifically, we can take this away now and look at the line, okay? Looking at this line, has it been respected on the daily time frame? We can see it has multiple times, right? And going back, now we could box this in as an area, which is what I would prefer to do, and you'll just find when you do that, it's a lot more accurate, but you can see even using the line how many times this area has been respected. Let me zoom in a little bit. Okay, we can see multiple areas on the daily where this area has been respected, which tells me then that this is a significant level, okay? And when we do switch to, the 4-hour or the daily and start looking for entry, I know that this is a key level of significance, okay? Again, I'm just using a line right now, but you can definitely box it in going back to the daily if you wanted to, or even the 4-hour. You can definitely go back and box it in. See if you can find like an engulfing, or if you just want to take the rectangle tool and catch as many of these wicks as you can. This is going to get you a better idea of how close we are to touching that area, or if we've touched it. So going to current price action, right? We've just about, so this is actually really interesting, and it's a really good area to kind of be looking at in terms of where price is right now, looking at the Euro US dollar, because we do have, we've talked about before, this wedge pattern forming here. If anything else, we have, a strong support and a strong resistance there. So knowing that this then is a key level tells me if we were to get a break above that, we can pretty much void this reversal pattern, right? Like that would be null and void. We're not going to really care about that so much because this key level is a lot more significant. However, if price continues on downward past this support on this wedge pattern, we've come really close here, okay? I'd almost consider that a rejection of the zone because we came so close. Like price isn't always going to respect your zone to the T. And that would be like a confirmation for me. So my first confirmation would be, okay, we rejected this major reversal area or this key level. Those are all the same things. that key level. And then we also broke down through our support on the wedge. Okay. And again, and this is the daily time frame. So that's really, really interesting. I'm sure a lot of you are looking at the euro US dollar right now because it's just kind of setting us up for a good move in either direction. So we will see. I'd say when we do see a break here, it's going to be quite significant. So that'll be really interesting to see how that one plays out, hopefully this week. And I think I'm going to leave you there. So that's really the big difference, you guys, is that support and resistance in terms of, when you're looking at zones, when you're looking at just lines, if you'd prefer to use lines, I don't know how many of you prefer to use lines, but it's fine if you do, are just these areas of support and resistance. So regular zones, I should go back and say regular zones are just these areas of support or resistance that you find all the way throughout. Like you're going to find these happening all the time, right? But they're not all significant. If I were to go out, so I just plotted these three really quick, right? If I were to zoom out to the, monthly time frame, I'm likely going to find that areas like, this one here, if we were to extend it, let's extend it really quick. I'll leave off here so I don't confuse you guys. Right? Are not going to be like, look, price is really not respecting this level all too often. We can see so much price action happening here where it wasn't. Yes, of course, it has been respected probably, at least once in the past, but it's not like our major reversal area we found before, our key level that we found before where it was respected multiple times. And that's the big difference. So the big difference is you want to zoom out. You want to make sure these key areas have been respected multiple times. I always say as a rule of thumb, 3 times or more, and on the monthly and weekly time frame. And that's the big difference. So there's no kind of magic trick to it. It's just you have to go through and get used to it. But that is my take on this. If you guys have any questions about it, definitely let me know below. And let me know what kind of videos you want to see next. Please subscribe to my channel if you haven't already. That would be awesome. I am planning on uploading every day in September, so that's fun. And I will see you guys in the next video.